All right, 7 o'clock in the evening on Tuesday, June 1st. Let's do this. It's going to be a pretty busy couple of weeks at this end. I got graduation activities going on with my daughter, Chelsea. So I had a function I had to be at tonight. But I wanted to definitely follow up on the weekend post and what I refer to as the scatter graph, which has generated about as much mail as any post since we began this trek a couple of years ago. And so I want to talk about that and respond to some of the comments and questions. Actually, more comments than questions. There really weren't many questions. And I appreciate the feedback. It certainly has been my ongoing mission, if you will, to try the best that I can to make this journey, to make my beliefs in trading, to make trading as a business as real as possible. It still frustrates me in terms of the hype, in terms of the my method is better than yours that's out there. The chat room mentality, which most of that's gone, but now, but there's still some out there that are run by people that just don't get it, and I again I'm no saint. I've got all my own faults, but I want to continue to try to do things that hopefully make this business seem real and appear real and be real. And so this was another attempt at, I guess, trying to do that. And really, for those of you that have followed the blog over the past couple of years, or even followed me well before that, that graph should as much be a reinforcement as anything, really. What I mean is nobody should look at that as I'm looking at it on my own screen and say, well, there's some new stuff here, because it basically is a summary of everything that we've been talking about for a few years now. And as I mentioned in the post over the weekend, you should be able to draw some conclusions from this. But what I'm trying to get away from is the fact that one day matters, or one trade matters. It still frustrates me to no end that this business, like poker, in a way, especially the last 5 years, is marketed in such a way where people think it's get rich easy and quickly, and it's all about who can call the market better and whose method's better and all that kind of thing. But this graph, hopefully, the point I want to get here is that every one of these dots, and by the way, there's about 900 data points on here, and they're consecutive. Okay, try to pick a time period where trading substantially the same, trading the same way, trading the same capital in terms of capital in the market. Not that the capital wasn't growing over time. So we've got a pretty good sample size here, 900 consecutive data points. So each one of these dots reflect a day, right, a day's result, and then when you really tear into each dot, if you will, if you could do that. Then you would realize that each dot is made up of anywhere from 1 to, 30, 40 sequences over the course of a day. And so, between the Svithjod Rock post that I've referred to many times, and some of the other posts I've done in terms of the concept of time, and now this, it's just another way to, try to get people to see, what this business is about. Peel away all the layers of the onion, take away all the smoke and mirrors, take away all the hype, all the marketing, all the negative aspects of this business. When you look at, as someone mentioned in the comments section, positive expectancy, okay, and you look at the distribution results over time, this is what you're going to see. And as I mentioned over the weekend, at first glance, you probably look at that and think, well, it's probably break even. You got a bunch of outliers to the north, a few to the south, one big one to the south. If I step away from the screen here a little bit, it looks like everything's kind of around the zero line. What's the issue, and what's the how can that be profitable? But the more you look at it, the more you see they're predominantly the dots are above the line, and the outliers for the most part offset. And you actually see quite a few dots toward that upper end of that first zone, underneath that first dotted line, where that's driving a lot of the profits, and certainly offsetting the scattering of the outliers to the south. And as I mentioned in the post, the over the 900 sample size, as a result, you're looking at over $2 million of profit. Now, the exact number is not relevant, but my point again is that every trade, every day, you can't get excited, you can't get too frustrated. Does this business frustrate me? Of course it does. Does it challenge me? Of course it does. Do I get into slumps and ruts? Of course I do, and I've talked about that. Do I have successful stretches? Absolutely. Do I have a quarter where I went with 3 losses in a whole quarter, beginning of 2009? Yes. Have I gone months without a loss? Yes. Okay. Have I been banging my head into in a little bit of a funk as I did in mid 2009? Yes. I mean, all of this is true, and all of this is a part of trading. And so I'm hopeful that this helps. Now, I guess what we could do is spend some time, especially on the lower section. I don't really like to discuss the top stuff will take care of themselves. All right. The top dots will take care of themselves. It's really, I think, when you look at the bottom, I guess if I were to, try to take this graph, which I keep staring at now, and say, okay, what section do I want to focus on? I mean, I could absolutely say outliers to the north. You need those positive outliers. You got to push them. You got to try to turn every trade into an outlier, like the Jellies learned, like they talked about when they did the posts when we wrapped up the first couple of efforts. But I want to focus on the lower section, all the negative days, because this is where I believe your business will be made or broken. All right. Now you see one real day from hell there, which was October of 2008. That Monday where I let the market get away from me. I mean, it was just one of those days in a career which I never expect to have again. The market got away from me. It was doing something I'd never done before. I did not manage it as well as I should have. It happened. And we have to recognize that it is the cumulative number of and the cumulative result of all these data points which is relevant, because it's not like sports where you win one, lose one, you're batting 500. Or your win-loss percentage is 500. If you win by 1 run and lose by 100, then you're down 99 in this business. So I can't say that that's not important. But at the same time, what I can tell you is it's one data point out of 900. So to that extent, over one's career, you're probably going to end up with something like that on a percentage basis. But it's really, I guess if I looked at this and I asked myself, we only have 10 minutes here and I'm already coming up on it, what lesson am I learning? What results in those lower dots? Okay. Lower probability outcome, not on your game, ill, lack of focus, trading on tilt, market gets away from you for whatever reason, flash crash. Okay. Those are all reasons why those dots are going to happen, and they're going to happen. I don't care which frickin' room you're in or which method you're using or which guru you're following, they're going to happen. I trade a discretionary probability process, in essence, based on what the market has taught me over the years. I rely on nobody other than myself and my ability to read the market. Okay, and as a result, I guess I'm trading a system. I'm trading a system of myself, and this is the result. So you're going to have those dots. The key is to minimize their impact. A lot of people are going to get washed out of this business. Well, the majority of people get washed out of this business. The reminiscence of a stock operator guy got washed out. There are people who have done some really bad damage to their lives as a result of those lower dots. So it's managing those lower dots and keeping your wits about you, which is most important. Not letting days get really away from you, except for maybe those 1, 2, 3 over the course of your career. Doing the best that you can to minimize. I had a draw today, guys. I read the open very, very well. Got caught a little bit midday in the chop. Just wasn't on my game. Wasn't focused coming back from the holiday. It's one of those small dots. Just below the red line. It happens. I felt really good about my trading today. I managed very, very well in terms of not letting it get away from me. So those are some thoughts. Follow up. Think about it. I'll get back at it tomorrow. Take care.